Welcome to TradeNBI.com. This is Sean. This report is for the 12th of September, and you can see we've hit that 50% wall, pretty close to having that turnaround buy configuration from the MBI reading, at least. Here we've got, a reading of 2360 is constantly changing, as you can see live right there, to 2350. So the magenta would just be above at this state. Now, of course, that's fluid simply because the current day is active, but from yesterday's actual reading, slightly under. We're getting a crossover of the steel above cyan. That is also bullish, but there's that pivot before dipping below red DOC. So if we get that pivot without the dip below, that's going to be problematic to maintain the run. And most likely, probably this relationship to the rising oil situation going to continue to put pressure on. It's also going to raise rates because the expectation that the Fed won't be easing with inflation, turning itself back up going into the fall. Again, poses an alternative approach. You might want to be in the safety of treasuries rather than the riskier asset. From an NQ standpoint, much stronger, and that has been the case because much better readings from both MBI reading as well as a stronger DOC. See the same crossover setup, but also starting now to create the pivot. Their shakeout has been better on the NASDAQ, which just meant there was less distribution overall within the selling that took place earlier. No big a shock, but there you go, TLT coming back down again. It's potential now that we could break this low from a TLT, causing rates to reach new highs because as oil continues to expand, the longer it stays there, and if it makes new highs as it is, the pressures become significant. Excuse that. And it's problematic, of course, as euro goes, so goes well. Oil is really driving this one. Is going to just put a lot of pressure on banks because, again, we've talked about all the reasons why being in the euro is not a great thing. Despite all the talk that you get, the euro's going to be okay, and that the dollar is the one that's really facing the struggle. It's like, really make that case for me. I try to understand it. Yes, overall globally, is there the potential for the dollar to fade? And now you have the deficit is the number one expenditure for the budget. These are all things that we knew was going to happen, and then that's part of the exponential nature of inflation as it relates to federal reserve fractional system. And it just becomes a question of how you address that. Well, obviously the easiest way out of it is to inflate your way out of it, but there's that fine line between hyperinflation versus arbitrary increase of asset classes. So when people talk about housing bubble and things like that, it's like clearly don't recall what happened in the 70s where a typical home more than doubled in its overall value in the span of just a few short years. It never returned. It's not going to. So while people may be priced out of it, and that's exactly what happened during that inflationary period in the 70s for those who don't know their history, which in this given era is quite a few, given the fact that for almost a generation you haven't seen anything like that. And even for as much as my age, I mean, the closest reference you'd have would be the early 80s that ended the Carter era. And I was just a young kid at that time, but still, the effects of it are still the same, and the outcome pretty obvious. And that led to pretty significant interest rate increases that were not mitigated. But you have a completely different scenario now where the printing of electronic resources is far outpaced comparative to what happened during that era. So the whole new ballgame. And from a gold standpoint, makes no sense to see a gold retracement. But again, this is what we've talked about: the derivative and paper market in gold, completely disconnected from the real asset acquisition. So Bitcoin the other day makes the new low, and people saw that break of low as an exhaustion potentially of short interest, or at least those willing to sell. We went all the way and took out that positive extreme, going all the way back over here, and that was enough to generate new buy interest. right there, and you have the exact same move from an ETH as it made new lows. So we expected the lows to be made from that MBI spike, and as soon as they were, it didn't take long for a little knee-jerk reaction. Though when you look at the shakeouts in that, they're still so bad in the negative numbers that hard to imagine that they're going to be able to sustain that. But again, with the crypto, you can get a momentum in one direction for a little bit as you generate some excitement. Here we look at it from the 50K. So we had that nice dip that returned itself way back up there. And we got the little pumped foreshooting short covering from those still existing. And you can see from an intraday, not a whole lot of short interest at this particular stage. We did have that MBI spike white, but it took place with the DOC Steel in a full reset mode. And again, also still in a reset mode. So if the retrace isn't steep enough down to the 50%, what you did is just created that stair-step trend line continuing to rise. When we look at it from an intraday standpoint, let's see if we can get the intraday. There we go, 5K. Well, in this case, 5 minute, because whenever I put the 5K chart up, it wants to crash the setup. Don't know why. I'm still working on that one. The dip and then the spike, and of course, I marked this one, which conveniently positive extreme. And then it's just a matter of, okay, we had that differential spike, brought us all the way back up. And you just follow along in the post market. They dipped it down, didn't quite get there, shot it back up, but eventually, yes, here we are in the post market, filling that positive extreme. And that's where price sits. Isn't that an amazing feature, how that goes? Thought I'd show you this fun one. Let's see if it's popped up. Teaching the AI setup to follow transition of colors based on the Morganacci retrace setups. So when below the 23%, they are all coloring at this one. So what it's doing is identifying in real time which zone it's in. It's taken a while to get it to do this successfully, slowly but surely. The idea being is that it's going to teach the ABM how to trail prospective stops more effectively. We've had it with the algo test, ANL, the reset, but hopefully it's going to provide us a much cleaner way to follow trades based on what the current readings are to maintain trend moves both up and down. And I believe that will be very successful. It's just been working out the glitches has not been easy. But as always, I will continue to update you with relevant details. Trade well. We'll talk to you later.